Our next guest built one of the essential cornerstones of decentralized finance with Compound, a lending product, and the recently launched Compound Treasury, a pathway for non-crypto financial institutions to earn yields in the rapidly expanding institutional DeFi subsector. Please welcome Robert Leshner, founder of Compound Labs and one of CoinDesk's most influential of 2021. Hi there, Robert. Thanks for joining us. So you predicted that the bridge between decentralized finance and traditional finance will narrow this year. How's that going so far?
Well, it's going great. One of the things that we're seeing is that for the last 2 years or so, there's been a lot of institutional interest and curiosity about the new financial markets that are being created in DeFi. This is the year that we're starting to see a lot of action of institutions coming into DeFi, using custodians, using brokers, and using new products that are specifically designed to act as bridges into DeFi, like Compound Treasury.
All right. So what's the state of institutional DeFi adoption, and how quickly do you see Compound Treasury in particular seeing adoption?
Yeah, so I would say we're right now, if you think about this as like a 9-inning ball game, we're probably in the second inning. It's still extremely early, but there's starting to be some real action. So one of the things that we're seeing is we're starting to onboard a lot of different types of institutions who are interested in the yields of DeFi, but without interacting with a lot of the complexity if they were to use it natively, namely IT, key risk, and the complexities of interacting with contracts. So the customer segments that we've begun working with that have already onboarded the Compound Treasury as examples, we have a bank, we have multiple fintechs, we have multiple different crypto native institutions, and we have multiple traditional Wall Street investors. And this really shows the sort of spectrum of curiosity. And we think it's going to continue to grow. I mean, all four of these customer groups are interested and passionate about yield, and this is a new market for them.
Robert, just to get into sort of a bigger philosophical issue here, is there any paradox just in the concept of institutional DeFi, just in the sense that, DeFi is all about decentralization and, it's decentralized finance, and institutions kind of represent the opposite of that. Is there any tension there or not really, in your opinion?
Oh, is Robert frozen?
Yes, I can hear you. Yeah.
Oh, sorry. You just froze for a moment.
I can't hear the other speaker.
Oh, okay. I'll re-ask the question. So I was just asking a more philosophical question. If there is any kind of tension in this concept of institutional DeFi, just in the sense that DeFi is, decentralized finance, and institutions are basically the opposite of decentralized. Is there any tension in there, or not so much in your opinion?
Well, I think it's an opportunity more than anything else. The fact that decentralized finance means that anyone can participate in it. It's open to a huge number of ecosystem participants. But centralized institutions are still the best way to bring lots of customers into an ecosystem. So a great example is, a bank might have, 2 million customers, and they might act as a centralized entity. But when they interact with a system like DeFi, might interact with it as a single entity. So a centralized entity can be a great way to onboard a massive number of end users or end customers. And there is a little bit of a tension in that, they typically operate in ways that they're used to, which is bilaterally or counterparty to counterparty, not by interacting with open systems. But, open systems have a lot of advantages. There's more efficiencies of the economics, they're more transparent, and it's easier to develop new systems on top of them. So centralized entities, in some ways are great participants. And, you can also think of them in some ways as like layer twos on top of DeFi networks, in that, they can build their own experiences and services and efficiencies on top as well. So I love centralized institutions getting involved.
While we're on the topic of centralization, let's talk about the U.S. government. I know you've been following regulation pretty carefully. First, I'd love to just hear your take on this new executive order. We don't know exactly where it's going to lead, but I guess what do you think the executive order means for DeFi specifically?
Yeah, it's a great question. So there was really two things that struck me as important coming out of the executive order. The first was actually the significant focus on the study and creation of a central bank digital currency. This is a concept that's gotten a lot of traction outside the U.S., and there's been chatter within the U.S. for a while now. But the executive order was, very heavily focused on analyzing, understanding, and evaluating the potential of a CBDC in the U.S., possibly coming from, the U.S. Treasury or the Federal Reserve. And this was a surprise to me. Previously, a lot of the narrative in the media and on the ground was that, the interest in DeFi wasn't really coming from the direction of the Fed and the CBDC, but was coming in, how do we get involved with Bitcoin? How do we get involved with DeFi? How do we tame these new markets? And so the very large focus on a CBDC was a surprise to a lot of us. And it was, in some ways, it's a delightful surprise because it's a recognition that the administration sees an opportunity to upgrade and overhaul the core payment infrastructure of the United States. So that was the first thing that really struck me. And the second was that overall, instead of the language being focused on the risks of crypto, in general, they were focused on the opportunities of crypto and the need to create innovation safely, cognizant of its role in the society and the broader world. And I think this was a surprise to the upside for a lot of the industry and ecosystem participants, because most of the interactions we had been hearing from the administration so far had been ones of skepticism, and the EO really was biased in a good way towards an excitement for the opportunities of crypto. So I thought all in all the executive order was fantastic, and it's long overdue.
Robert, since you mentioned it, do you think the U.S. should issue a digital dollar or a CBDC? Because there's a lot of controversy about this, in terms of privacy protections. And if you had to choose right now, do you think the U.S. needs a digital dollar or no?
I think the answer is yes. If you, asked me to choose a direction, I would say the advantages of it would be significant. Right now, when you think about most of the U.S. Payment and banking system, it's in these closed centralized banks. And yes, they talk to each other, but it's still extremely cumbersome. I mean, look at how horrible it is to send and receive a wire transfer or, even an ACH. It's still extremely clunky, and it's far harder and more cumbersome than stablecoins are today. If you look at how easy it is to send and receive USD coin or an equivalent stablecoin, it's, instant and, borderless. Mm-hmm. And so I think a CBDC, if it's done correctly, even if it's done in a closed system way where it's, not programmable necessarily, it will create efficiencies for the participants in it. And over time, those participants can open up programmability and openness to the CBDC on their own. Or, and this is the best case scenario, is that a CBDC would, from the outset, be open and programmable. And you would get all of the massive innovations that are being built in DeFi on a central bank digital currency. My belief is that if the government goes in this direction, it's probably not going to be open and programmable at the outset, simply because there's more concern than there would be with a closed system where it's running among trusted participants like a number of banking institutions. But the end state of this, would be, if you have a standardized digital currency that can go anywhere and that's more easily programmable, you're going to have, a really efficient financial system.
Robert, I just want to touch on some DeFi trends. Gauntlet is a risk management and analysis firm. They're working very deeply with Compound. It's one of the early examples of business to DAO, B2DAO relations. And Compound DAO has also hired some auditors after their exploit last year. So just wanted to get your thoughts on the B2DAO trend. And then as well, you also run Robot Ventures. So what kind of trends are you investing in terms of DeFi this year?
Yeah, that's a great question. So DAOs in general are relatively new. A couple years ago, we had the DAO, which was the first DAO. And then we had, a couple very early DeFi DAOs like MakerDAO. What we're seeing now is that the DAO ecosystem or the protocol ecosystem is maturing significantly. And these protocols and these communities and these DAOs are amassing extremely large treasuries, extremely large protocols, and extremely large ecosystems. And I like to say that there's, really just two directions that, innovation goes: bundling things and unbundling things. DAOs really, in a lot of ways, are unbundling corporations. And there's a lot of specific services that these DAOs need, like risk analysis, which is what Gauntlet's providing, or security auditing and consulting, which is what firms like Open Zeppelin are providing. You're going to start to see more and more professional service firms that are created to support DAOs in all the different things that they need: hiring, treasury management, things like this. And so, DAOs as a form of organization are new but growing rapidly. And I think over the next couple of years, we're going to see, really professionally run decentralized organizations that move, with a lot of speed, but a lot of precision.